Good evening, everyone. Let us now take our final steps toward this topic of PGBP. So, in this topic, till now, we have discussed the various provisions, we have discussed the various nuances, and now we will be completing all the minutest part of this chapter with also practice of some questions as was decided in the previous class. So let me just go back and we can just do a quick revision. So good evening, everyone. And yes, let us first go to your doubts. Yes, very good evening, Soumya. Very good evening, Ritika, Omkar, Rajveer, Priyanshi. Who is this Mr. M.A.? Yes, Boma, good evening. So students, Almas, very good evening. So first, let us take up your queries. So let me know what are your particular questions. Astha has raised hand. Yes, Astha, beta.
Good evening, sir.
Very good evening, beta. Please tell me.
सर कंपोजिट इनकम में डाउट था
बोलिए प्लीज
सर उसमें एक लिखा था पॉइंट कि फॉर द पर्पस ऑफ डिटरमिनिंग सच कॉस्ट नो डिडक्शन शैल बी मेड इन रिस्पेक्ट ऑफ द अमाउंट ऑफ एनी सब्सिडी which under the provision of section 1030 or 1031 respectively is not includable in the total income. Sir, इसका मीनिंग क्या है?
Okay. सबसे पहले what is 10, 30, 31? See, this composite income, let me just open so that Acha, can you just let me know the page from where you read this so that it will be more easy for others to understand?
Sir, 3.310.
3.310. Chalo, great. Now, so firstly, let me explain what we are dealing with. See, this composite income, if you'll remember, was the last point that we discussed in the previous class. So composite income is basically dealing with the income where your business comprises of both. Some part is the agriculture part where you are growing the tea leaves, the coffee beans, or the rubber plants. And the second part is where you're also manufacturing using that particular agricultural produce. Now, when you are preparing your business's P&L, which is a common P&L because the debit of the P&L covers both the expenses, the agriculture expenses of growing and the manufacturing expenses of producing the final product, and your revenue side is showing the sales of the finished product like the final tea powder or the coffee powder, etc. Then the net profit that your business is getting is called as the composite income, for which we have these percentages. So that from that net profit, which is including agriculture and manufacturing both, we could determine the taxable portion which is applicable to the manufacturing part. Because out of this, one part or one portion is also pertaining to the agriculture, which will be exempt. So for easy computation, they have given this deemed particular bifurcation in rules of income tax. Now, with relation to this, what Astha is asking, she is asking in particular about these 2 points. Now, what are these 2 points? Section 1030 and 1031. When you study the chapter of exemptions, which is provided under Section 10 of the Income Tax Act, the exemptions is a list given in Section 10, various clauses. In that, these 2 clauses, 30 and 31, they particularly deals with exemptions with respect to subsidies. Now, government, for promoting different activities, gives subsidy. Now, both these subsidies are basically dealing with the present income which we are discussing. So here you also have the details like see 1030 deals with the exemption for subsidy which is given by the tea board, and it is given to those people who are engaged in the business of growing and manufacturing tea, which is our case. Similarly, 1031 is dealing with the subsidy which is given by this particular board, which is dealing in those businesses like manufacturing of rubber, coffee, cardamom, etc. Again, In this particular notified rules, we have rubber also, we have coffee powder also. So in this particular case, both these sections firstly are providing exemption to the subsidy which these boards give to the businesses. Now I come to particular Astha's point, which is I think she is reading note 1. Now what does note 1 says? In computing income from the sale of this tea or coffee or rubber, an allowance shall be made in respect of cost of planting the bushes, rubber plants, coffee plants, etc. What is it? Simply, when you are computing this PGBP income from this composite business, you will take a deduction. When you say an allowance shall be made, it means you will allow this particular cost. In simple words, you will show this as an expense, you will take this deduction. What? The expense which is relating to cost of planting the bushes, the rubber plant, coffee plants. So whatever expense you have incurred on planting these in your field, those expenses are allowed. Further, it says in replacement of bushes plant that have died or become permanently useless in an area already planted, if such area has not previously been abandoned. Fine. Now, for the purpose of determining such cost, no deduction shall be made in respect of amount of any subsidy which, under the provisions of these sections 10, 30, 31, is not included in the total income. Now, please understand the meaning of this language. What it says, for the purpose of determining this cost, which cost? The cost of planting these bushes. No deduction shall be made in respect of the amount of subsidy. Now see, subsidy is an income. Now if you remember the accounting treatment, what is taught in accounts? Accounts, if I'm not wrong, it is I think AS12 dealing with government grants and subsidy. It says that whenever you receive subsidy, how do you show it in accounts? One, either you show it as a subsidiary income on the P&L credit side, or you can show it as a deduction from the respective expense for which that subsidy or grant is received. Now here, if the government has given you grant or this tea coffee board has given you grant, particularly for planting these tea bushes or coffee plants, then this particular subsidy, which is your income, should not be deducted from this particular cost. In simple words, you will claim the total cost because we want the final net profit arising out of this particular business. Is this clear, Asta? Yes, Asta, I hope I'm clear. Asta, please confirm if you have understood. Okay. Let us proceed, students. Yes. Anybody else has a question or doubt? Acha, you want me to unmute? Okay. I thought it is your previous hand raise. Yes, Asta. Tell me.
सर इट मीन्स अगर सब्सिडी हमें उसके रिगार्डिंग नहीं मिली है तो हम उसे डिडक्ट करेंगे?
नहीं बेटा, सी अगर सब्सिडी उसके रिगार्डिंग नहीं मिले तो वैसे भी आप अकाउंट्स में डिडक्ट नहीं करते. एज आई जस्ट एक्सप्लेन, द अकाउंटिंग ट्रीटमेंट इज when subsidy is a particular subsidy, like for example you are given capital subsidy for purchasing a particular asset, then what does account says? You show that particular subsidy as a reduction from the cost of asset, so effectively the depreciation reduces. Similarly here, if the subsidy is given for the cost of plantation, so you can claim the deduction of the cost of plant, point number one. And while doing so, you should not deduct the subsidy from that. In short, you should claim the total cost of plantation as your cost while computing this PGBP income.
ओके सर.
Understood?
यस सर. सर एक 40 सेक्शन था 40A 5th, सर वो भी एक्सप्लेन कर
Page
दो.
number, page number. 40A सबसेक्शन क्या है?
5.
सबसेक्शन या क्लॉज है?
सर क्लॉज.
Students, others may also come up with your specific queries.
सर 3.267. 267. Last fifth point.
48, 5,
44.
4 or 5?
4, sir.
Okay. So 40 clauses, sub clause 4, correct?
Yes, sir.
Okay. Now see, what is this 40 clause A dealing with? 40 clause A is dealing with disallowances. Now, if you remember, I had given you two types of disallowances broadly in my notes. One, disallowances where you are supposed to deduct TDS and you have not deducted TDS. Two, disallowance for income tax or direct tax. Now, this is dealing with the first one where you are supposed to deduct TDS. Now, here, what is this particular point? See, today, as an employer, I am contributing to my employees' provident fund, which is called as employer's contribution to provident fund. Correct? This you have studied in salaries also. You show it as a part of assesses salary income, what employer's contribution to provident fund. Obviously, after allowing the exemptions provided in section 10 bracket 11 bracket 12. Now, similarly, in businessmen's books, that is the books of the employer in particular, this becomes an expense. So what is income for the employee is my expense. And if you remember, we have already studied in different provisions that I can claim the deduction of the amount which I am transferring to employees provident fund with only one main condition. First condition, that the provident fund should be approved. Second, I should have deposited my contribution before the due date of filing returns, because this is covered in section 43B also. Now, for this, there is this condition also in 40 clause A sub clause 4 that TDS should have been deducted. But now, interestingly, understand this point. Today, I am making contribution to your provident fund. Today, you are not getting money out of this provident fund as an employee. You get this money only at a time of retirement. And at that time, it is decided whether this amount would be taxable or it will be exempt in your hands. Now, when I'm paying or I'm depositing money in your provident fund, today there is no question of deducting TDS, because today there is no income in your hands. The income will accrue only when you receive this money. So what this point says, that I will get deduction today. Today of what? Today of the contribution I'm making to provident fund. Correct? But when I will get this, if I have made effective arrangements so that whenever in future you get this money out of the provident fund, when this will happen at the time of retirement, at that time I should have made the arrangements today that at that time proper TDS is deducted from such payments. So whatever would be the TDS, that should be deducted at that time. This arrangement I should make today. Today, no TDS will be deductible because you're not getting the money. But whenever in future you get the money, I should make arrangements today. So what arrangements do we make? So we have those clauses in that particular agreement. We already get it signed from you that whenever you are getting payment from this provident fund, these things shall be deducted. So those are the arrangements that they are talking about. I hope this is clear again. Yes, beta. Chalo. So are your doubts done, beta? Should I take up the other doubts? Ishan is asking, sir, in section 44 AD, if turnover is 95% or more, then the presumptive income will be 6% of turnover. No. Now or no, I don't know what you are saying. Let me take you to the section. See, we'll discuss each section now today with more technicalities. So let me take you to section 44. One second, you said 44 AD. Okay, so you are in the presumptive income category. Okay. If anybody knows the page number, you can just ping me so that it will be faster. 43CA. Yes, I have to also explain you something in 43CA. Okay, Ishan has said that it is 3.301. Okay, students, let us take up this section again in detail. We covered this section in the previous class, but more as an overview. Let us go to the details of this section today. So what is this section? Now, when you read all other sections, right from day one, right from discussion of the reconciliation format, the add less concept, then discussing what is the provisions for debit, what is the provision for credit, everything when you do, when you take the pains of understanding all the provisions, remembering them, going into deep of each and every provisions and consolidating them, suddenly towards the end of this chapter, the act says, no need of doing so much. Simply do what? Take your turnover multiplied by a percentage, that is PGBP income, full stop. That's it. Or like in case of truck owners, people dealing in goods transportation, they are simply saying truck multiplied by some estimated amount. That is your PGBP income from the transportation of goods business, full stop. So whatever you studied in past 5 sessions, that is of no use. Now, as a student, when you read a section like this, you feel, Arey yaar, it was waste studying so much because now the act simply says take the turnover multiplied by the percentage or truck multiplied by some amount. Then why did we waste so much time studying so much in detail, especially such confusing or such complicated provisions? The answer is the presumptive provisions are not applicable to everyone. I explained this in the previous, I'll again repeat. Presumptive provisions are made for small businesses for whom detailed compliances, having an expert chartered accountant dealing with their income tax computation is not feasible. Those businesses who are small, who are in the unorganized sector, they should also be able to comply with the law. So for them, the law is simplified, saying that you need not get into the detailed computation. So for them, what the computation is provided? In the previous class, we discussed in brief. Today we'll go to much detail with some technical things. So I have 3-4 sections which I want to go in much details. This is the first one because already it is a doubt by Ishan. Now, what is 44 AD, ADA, AE dealing with? Let me first inform you one thing, students. These are not the only 3 sections of presumptive income. You have furthermore presumptive income sections, but they are not covered in your syllabus at the inter level. So remember this, that when you go to the finals, in the same chapters, what you have studied till now, you will find much more things coming up in the final in the form of some additional provisions which are intentfully kept outside right now. And also in provisions, what you have already studied, more detailings, some more case law driven pointers as to what should happen in this case, what should happen in that case. So that is how these same topics would be different and it would be at a different level at the finals. Fine. Coming back to the point. Now, these 3 sections are dealing with what? Firstly, 44 AE. It deals with a goods transport business. So we can all see on the roads, there are different trucks which are plying. There are different this 5-wheelers they are plying, and what they are doing, they are carrying goods, they are transporting goods. For them 44AE is crafted. 44ADA is crafted for people like us, that is professionals. And for remaining businesses, you can say 44AD applies. So as good as 44AD covers many businesses. Obviously, except these two, 44 ADA, because for them you have already specific sections, and also except 2 more businesses, which are the commission-based business, the people engage in agency business. Except these three, that is 44 ADA and the commission-based and the agency business, remaining all businesses, remaining all professions, for all 44 AD applies. Now, Today, let us go to a bit more in detail with these provisions. These provisions will be helpful to you in exams, mainly in the MCQ type of questions. Okay, now let us have a comparative study that is very much helpful during exams. And that is where our modules have beautifully given the entire provision in this comparative chart. So what it says, eligibility. As you can see comparatively, first two sections are eligible, applicable only where the assessees are resident. But in the third case, there is no such condition. So for goods transport businessmen, even where the business is run by a non-resident person, still the benefit of 44AD is applicable, means they can go for presumptive income. But for these two sections, the businesses professions covered over here, only a resident professional, only a resident businessman is eligible for the section's benefit. Point number one. Point number two, differentiation is, if you observe, this section clearly spells out that only three types of persons would be eligible. Individuals, HUFs, partnerships, but excluding LLP. Obviously, why LLP excluded? Because LLP is one who's already doing so much compliance. So for them, going into detailings of PGBP should not be a problem, because if you are LLP, already you are part of the company's compliance. Then you should also do the detailed compliance of PGBP. No such relaxation should be given. Similarly, if you observe 44 ADA, which is for professionals, that is for us, they have covered only two persons, because practically also you will not find a HUF which is a CA practitioner, because that is not allowed by the bylaws. So logically also there cannot be a HUF who is a CA firm or a lawyer firm, etc. So either it would be individuals who are these, or it would be a partnership. However, when you come to 44A, they have not put any such person restriction. So here even a company can be covered in 44A, even a partnership firm, LLP, individual, everybody or anybody can be covered. So understand this comparative difference first. Now comes the second difference. As I mentioned, the section or these presumptive income provisions are crafted for those assessees for whom detailed compliance is not viable, not possible. Now, to add on to this, what this section puts a condition in this section 44AD, that we will not allow the benefit of this section if you are already claiming deductions under any of these sections of the income tax law, 10AA, which is SEZ, or chapter 6A, heading C only, not entire chapter 6A, only part C, heading C, which covers income for specific incomes. Why? Because over there, these people have to anyways get the books audited. So they have to maintain detailed books, get them audited. If you are able to do so much of compliance for getting those special benefits, why can't you do compliance over here? So that is why they have been also excluded. Now, in case of 44AD, who all are not eligible for 44AD? So they have said professionals, because they are already covered in ADA, and these two businesses, which are basically the commission business or the agency business. In 44AD, who all are covered? It covers only the specified professionals, not all. So remember this, if you are a professional but not covered in this list of specified professions, then you are not covered in 44 ADA, you are covered in AD. Please be clear. See, these are those minute points where a question can be expected in the exams and where you need to be prepared. So you are a professional but not covered in this list of specified professions. What is a specified profession list? So it covers a legal profession, medical, engineering, architecture, accountancy, which is our profession, technical consultancy, interior decorator, and notified professions. All are covered in notified professions. It covers authorized representatives, film artists, company secretary, and IT professionals. So only these professionals are covered in this particular 44 ADA. Other professionals would by default get covered in 44 AD. Fine. Now the main point. The main point is these sections, as I mentioned, are designed to cover small businesses. Those businesses for whom detailed compliance is not possible, not feasible. These businesses, these professions are identified through the turnover limits. So what is a turnover limit? Let us understand. In section 44AD, what it says eligible business is any business other than 44A. Why? Because there is a separate section whose gross turnover receipts in the previous year is either less than or equal to 200 lakhs. So roughly, not roughly, means precisely 2 crores. So where your gross turnover or your gross receipts. Now, why both these terms are used, turnover and receipts? Because PGBP allows you to follow mercantile basis also or cash basis also. So those who are following mercantile basis, obviously for them, the turnover which is derived on mercantile basis, that is the one which has accrued during the year, that is counted as turnover. And those who are following cash basis, we will see the cash receipts only. Now, if your turnover does not crosses 2 crore, you are eligible. Fine. But now, to promote the banking channel transactions, to promote online transactions, there is a specific exclusion given over here. What it says: any business other than business referred to in 44A whose total turnover gross receipts in the previous year does not exceed 3 crores. So the limit of 2 crores has been raised to 3 crores with a condition that when this 3 crore limit will apply, when your 95% or more aggregate receipts are through the banking channel, or in their language, your cash receipts should not exceed 5% of the total turnover or receipts. This is what is the criteria. Similarly, here, the criteria in the professional category is 50 lakh rupees or 75 lakh rupees, and again 75 lakhs with the same criteria of minimum 95% through the banking channel. Important. In case of goods transport, the limit is not in terms of turnover, the limit is in terms of number of vehicles, number of goods carriages. So instead of using the word vehicle or trucks, they have used the word goods carriages. We will call it as vehicles for our understanding. So they have said it should not exceed 10. Now, what is the further condition given? If, in effect, if the turnover of business is greater than 2 crore and up to 3 crores, the benefit of this section can be availed only if your aggregate cash receipt does not exceed 5. That is okay, that we have understood. For the purpose of this section, the receipt of amount or aggregate of the amount by check drawn on bank or by bank draft, which is not account pay, would be deemed to be receipts in cash. So we already know. So this was the point right from 40A bracket 3, that either account pay check or account pay draft or the notified banking channels, anything would be acceptable. But cash, bearer check, or even cross check would not be acceptable. Same rule continues over here. Now we come to this point where I think is there was a specific question of Ishan. So it will get answered here. Plus, if anybody else has any particular doubt, that also will be answered here. Okay. Now, if you satisfy these conditions, whatever we discussed above, in that particular case, you will be eligible for the benefits that is given over here. Benefits means you need not get into the detailed computation part. You can compute your income by the presumptive method. Now, what is this? The presumptive is in case of 44AD, that is, let us call it as businesses, though it also covers professions, but mainly it is for businesses. Your presumptive income will be taken as 8% of your turnover or receipts. Simple. So what is the total turnover or receipts multiplied by 8%. However, again, to promote the banking channel transactions, they have said that whatever portion of your total turnover or receipts is through account pay, check, draft, or those notified banking channels, ECS, IMPS, UPI, RTGS, etc., etc. For that portion of turnover, we will apply 6%. Now, What I understood question of Ishan, I'll try to answer that question. This particular 6%, Ishan, will apply to both persons who are in the 2 crore category also and who are in the 3 crore category also. Now, what it means? Let us say I am in 4480. Why? Because my business is not falling in the other two sections and it is not commission business. So let us just say, take a simple example. I am running a small trading shop. Again, a simplest example, grocery shop. Now, I fit in 4480 because I'm a resident, I'm individual, and my business is fitting in this particular requirement. Now, my total turnover, Ishan, in this year is 1.5 crores or 150 lakhs, out of which 90 lakhs is through banking channel and remaining, which is 60 lakhs, is through cash. For me, firstly, which limit applies? The 2 crore limit applies, not the 3 crore limit. Why? Because more than 5% is in cash. So for me, the limit of 3 crores will not apply. Now, I'm in the 2 crore limit and I'm within the limit because my total turnover is only 1.5 crores. So I'm eligible for this particular section. Now, I will be showing my income as, now understand the workings, 90 lakhs, which is the banking portion, multiplied by 6%. 60 lakhs, which is the cash portion, multiplied by 8%. Total, this becomes my PGBP income. Second example. Now, majority of my customers are using the QR code for making payment. Majority, everything is coming through online. So this year's turnover, let us take Ishan, for example, is 2.5 crores. And out of 2.5 crores, 2.4 crores is through this recommended banking channel. Only 10 lakhs is through the cash. Now, firstly, we will check whether I fit in this section 44 AD. When will I fit in this section 44 AD? When my turnover is within 3 crores, but when this 3 crore limit will apply, if 95% or more is by the banking channel or less than 5% is by the cash mechanism. Now in this example, out of my total turnover of 2.5 crores, 2.4 crores, which is more than 95%, is through the banking channel. So for me, 3 crores limit applies to check the eligibility. Now, I am still eligible for 44 AD as my turnover, even though exceeding 2 crores, but it is within 3 crores, and I satisfy the condition of 95% banking channel receipts. How do I make computation? Now, in this case, out of 2.5 crores, 2.4 crores is through the banking channel multiplied by 6%. And the 10 lakhs, which is through the cash channel, will still be multiplied by 8%. So, Ishan, I hope your query gets addressed here. Great. Perfect. Similarly, presumptive income for professionals, how the income is computed, it is taken as 50% of the gross receipts. Now, coming to the transporter. In transporter, what is the scene? Let us understand. Let us take an example of this transporter. The requirement is I should not own more than 10 goods carriages. And goods carriages means the trucks, the tempos which you are using for transporting goods. Please observe, on the face of these trucks and tempos here, they have to compulsorily write goods carriage. That is where you can identify why that section is using the word goods carriage, because it is a specific rule by the RTO that whoever wants to get into goods transportation, they have to, at the time of registration, get their vehicles registered for goods transport. Otherwise, legally, they are not eligible or allowed to use the vehicle for transporting goods. And that is where the RTO gives them this particular goods carriage tag, which they have to put it on the face. Now, within goods carriage, they have made two categories of the vehicle. heavy goods vehicle and other than heavy goods vehicle, let us call it as light goods vehicle. Firstly, what is heavy and what is light? The definition will come. It is 12,000 kgs criteria that we'll see later. Now, I have 6 vehicles, out of which 5 are heavy and 1 is light. See, we are now today, our today's intention is more understanding these provisions practically with the viewpoint of being able to answer those MCQ questions. So please focus on the workings which I'm trying to explain. That is, I'm taking all practical illustrations. So out of 6 trucks, firstly, I'm having 6 trucks. I am, let us say, a goods transport company. Firstly, am I eligible? Yes, because this section allows any assessee. So I'm eligible even though I'm a company. Whether I have trucks less than 10, yes, I have only 6 trucks. So I can satisfy the conditions. I fit in this presumptive income section 44AE. As per this section, for the purpose of computation, when I come to this third point, I see that I have 6 trucks. Out of 6, 5 are heavy trucks. Now for these heavy trucks, what I have to see? I have to see the gross vehicle weight or the unladen weight of these trucks. Now what is this gross vehicle weight or unladen weight? See again, when you get this trucks registered with the RTO, if you see the registration details, you will find all these details mentioned there, that what is the weight of your trucks, the unladen weight or the gross vehicle weight. Now let us say those 5 trucks which are heavy trucks, my gross vehicle weights of these trucks is 15 tons, 15 tons. So each truck is of 15 tons. So I'll come to 1 truck's working, because whatever is 1 truck's working multiplied by 5 will be the total income of all these 5 heavy trucks. So I have 6 trucks, out of which 5 are heavy. So we are talking about the heavy trucks. Now, what is the weight of this truck, which is mentioned in my RTO certificate? It is 15 tons. How will I do working? The value or the income is computed at the rate of rupees 1000 per ton of the weight. Now, how much is my weight? 15 tons, 15 tons. So 15 multiplied by 1000. This will be my income for every month or part of the month. So in short, this 15,000 rupees, 15 tons, 15 multiplied by 1000, this 15,000 becomes my 1 month's income of 1 truck multiplied by 12 months. So 15,000 into 12 months. How much it becomes? It becomes 1,80,000. This is the estimated income of 1 heavy goods vehicle. I have 5 such vehicles. So 1,80,000, which is the income of 1 vehicle, estimated income for the whole year, multiplied by 5. Is this clear? So how much it will be? It will be 9 lakhs. So 9 lakhs becomes the estimated income of the 5 heavy trucks. Now I have 1 small truck also, or let us say it may be that 5-wheeler, what we say tempo. For that, the income computation will be taken at the rate of rupees 7,500 per month or part directly. So there is no ton business here. Simply your estimated income is 7,500, but this is per month. So again, multiplied by 12. So 7,500 multiplied by 12 will give me my answer. Is this clear? Yes, I think students have already calculated. Perfect. So it is 90,000. So what is my total income in this example? Estimated total income as per this section, 9,90,000. 9 lakhs for the 5 big trucks and 90,000 for this one not big truck, that is small truck, which will be 9,90,000 for the whole year. Perfect. Excellent. Rajveer, Kevin, Soumya, Priyanshi, superb. Great. Yes, Almas, Kirti. I'm coming to that, but Ishan, don't worry. As I said, today we are going to go into depths of all these sections. See, if you observe how we have approached this chapter, this being very vast, plus the sections being very heavy or vast, how we have approached? We have approached this in 2 parts. Just 1 second, students. Sorry. So, understand this, students. The income that we are computing over here in this particular section, this income becomes your total income for the whole year. And 1 second, I think I was talking about this, that we are going to, sorry, I was talking about the approach. So if you observe, students, we have studied this whole chapter in a particular approach. What is that approach? First, I gave you the overview of every section. Like in the first lecture, whenever we studied that section, I just informed you something about the section. In the second lecture, when we came back, I went into more details of that section. So what happens if I go to do details of all big sections at the start? One, it becomes very boring, and also you do not get the feel. Instead, why I'm telling you this should also be your approach. So instead, you should do one thing. You should first have an overview. And that is why I appreciate our module very much, because if you see, our module has done the same thing. At the start, in the tabular form, they've given you overview of all the sections. So what happens when you have a broad overview, you know, okay, acha, these are the different sections or these are the different provisions. Now, when you go to details of each one, you understand and even you retain it more. So Ishan, don't worry, we are going to go to this section entirely in detail. Anyways, even if you would not have asked this question, I was going to, as I said, now I have 4 important sections to be covered today, like how we covered some sections in the previous class. In today's class, we are going to cover 4 important sections. This is the first one, right? Okay. Now, so this is the estimated income. Now, as we move ahead, this point, now see, we are going to some tricky parts. And be prepared, students. At this level, you should expect any trick questions which would be dealing with one of these parts. Now, what is this trick question or what is this tricky part? Let us understand. Now, I'm again coming back to 44 AD. What did 44 AD say? 44 AD said here that whatever is your banking receipts, on that we will compute 6%, and whatever is your cash receipts, we will compute 8%. In simple. Now, let us say my business is mercantile. Please understand this example. The same example of 1.5 crores total turnover, mercantile assessee, out of which 90 lakhs is banking, 60 lakhs is cash. My first example. Now, in this particular case, we very plainly said, okay, 90 lakhs into a 6% because banking, 60 lakhs into 8% because cash. Okay. But we have to understand one thing, that since I'm a mercantile assessee, there is a good possibility that whatever is my turnover in the form of credit sales, that is not yet received. That is only credit sales, which I am also considering as turnover because we are following mercantile system. Understand this and pay attention. Now, in this particular case, the point is, if I have made certain sales, like my total turnover as per the books of accounts prepared for 31st March is showing 1.5 CR, out of which I am saying 90 lakhs is bank, 60 lakhs is cash, but this will be not possible until and unless I have received the money. Because until and unless my debtors have paid me, how will I know that out of my credit sales, whatever will be realized through banking channel or through cash? So there is a possibility that this turnover, which we are talking about, 1.5 CR turnover for the year, which includes credit sales, as on 31st March, when I identify that the turnover is 1.5 crores, I don't know how much of it will be received in the banking channel, because whatever is credit sales, especially which are yet to be realized, in other words, which are being carried forward in my books as debtors, how will I know how to compute? whether 6% or 8%. I hope you understood the technicality, right? Now, I'll give you the answer, or the law gives you the answer, correct? Yes, Priyanshi, we are coming to that also. Priyanshi has a very good point, sir. There is a possibility of bad debts also. Very good. I'll come to that. But first, credit sales, for the time being, I'm not taking bad debts. Priyanshi shall answer that also. Credit sales, how will you multiply? 8% or 6%? For this, they have said that this condition that the amount should be received through account, paycheck, or draft, etc., which is the prescribed medium, it should be received either during the previous year or up to the due date of filing returns under 139 in respect of that previous year. In other words, please pay attention. Turnover 1.5 crores, out of which I want to find out the banking turnover, but that banking turnover will include one which has been received up to 31st of March, that is during the previous year through the banking channel, or maximum up to my due date of filing returns under 139(1), which is different for different assessees. Here, majorly, it would be 31st of July. Now, understand this. What if some debtors have not paid me even up to the due date of filing returns? Are they bad debts? No. They are debtors. I made them follow up. They say, sir, I will pay, and I am also okay, because in businesses we allow 4 months, 5 months, 6 months, and it was just the last March month's sales. So possibility they may not have paid me in those 3-4 months. My due date has come. Importantly, students, as per the provisions, this credit sales will automatically get categorized as cash sales, unfortunately, because they have said that we will give you the benefit of this 6% of the amount which is either received when during the previous year or maximum up to the due date of filing your returns. See, we are going to the minutest depth of these sections so that you can understand and appreciate these points. Is this clear? Now, remember one thing, all the 3 sections have this common point in the presumptive income. What? That this is the presumptive income which we are saying that you should claim as your PGBP income. You can always claim a higher amount. We don't have a problem. So wherever they have given the presumptive income, they are also saying or a higher amount. So you can even claim any amount which is higher. We are very okay. So either this amount what we are showing, or you can show a higher amount. We have no problem. Both are accepted. But what is interesting is you should not claim a lower amount. What happens if you claim a lower? That is another interesting part. We'll come to that. Before this, answering Priyanshi's question. Sir, what if there is a bad debts? See, Priyanshi, keep this presumptive aside. Let us take a normal business case. You are computing PGBP income by the normal provision, our provision of preparing P&L, doing adless, etc. In that scenario also, whenever bad debts happen, what has happened in that case? Firstly, you have reported the sales in your trading account credit side as the total sales. And if any portion of that sales has become bad and you want to write it off because you have no hopes of recovering, you show it as a expense or as a loss. Correct? So let us first understand what happens when we are not following presumptive method. We show the entire sales in my trading credit, and whenever the bad debts we want to book, we want to claim, we show the bad debts as our expenses, as our losses. Now here, interestingly, what happens, which you will get answer in the next point. I'll just read the next point before I answer you, Priyanshi. What does the next point says? Non-allowability of deductions while computing this presumptive income. So what does this section says? When you are taking the presumptive income as per these sections, any of these 3, you will not be allowed to claim any deduction between 30 to 38 because the law will deem that you have taken the full deduction or the full effect has been given to all these deductions. And let me tell you, if you remember, we studied bad debts, which is covered in 36.1. Today, in fact, I want to take that section also in detail. So we'll revisit that section also in detail. But bad debts is covered in 36.1. So now coming to your point, what will happen, Priyanshi, in case of presumptive income? So if I am a person who is preparing my books showing credit sales because I'm following the mercantile system, those credit sales, I will be computing the presumptive income as per this section 1. So it is getting covered in your presumptive income. 2, in the next year, whenever in future you believe or you show it as bad in your books, there is no separate deduction for that bad debts because these sections are given full effect. This is the presumption that these sections are given complete effect. So no further deduction will be allowed to you for bad debts. Now let me come to the chat box to see what are your So let me come to the chat box. It says there can be possibility of bad debts also at the same time. Okay, I think I've answered this, sir. Even if such credit sales amount is received through bank in future period, it would still be a cash sales in the relevant pre-buy. No, beta. Ishan, see, once I am going by the mercantile method, once I'm following mercantile method, the credit sales are shown as debtors in my books. And when they are shown as debtors in my books, in the future, whenever they are realized, they do not become cash sales. Please, they are realization from debtors. So it will not be shown as a credit, cash sales in my books again. It cannot be double tax, first as credit and then as cash. That will not happen. So once you have shown it as credit sales and taken in your presumptive income, again it will not be covered in cash, correct? Or else it will be double computation. Okay. Hmm. Ishan, if you are saying, but if, sir, it is realized after due date, then what? See, I've already answered. If credit sales are realized after due date, you have already considered that credit sales in the previous year itself. Now, in the next year, when it is realized, you will not again consider it. In the previous year itself, it has been considered for computing this income. Yes, it has been considered as cash sales because you did not satisfy their condition of realization up to the due date. So it was considered as cash sales, and considering it as cash sales, you have computed 8% on that. Now, in the future year, when the amount is realized, it cannot again be considered as cash sale of the next year to again compute uh, presumptive income on that. Correct, Beda? Asta, beta, 1 second. I'll come to your point. Let me first cover this because I have follow-up questions. But deductions will not be needed because debtors will convert into cash because due date is passed. I did not get this point, Priyanshi. But I think I've catered to all your queries relating to this, right? Okay. Now, so the general rule is that when you're following the presumptive section, it will be presumed that all the deductions are allowed, correct? Now, what about the restrictive section? Because they are given in 40 different provisions. Now, this section or the presumptive income says that even all your restrictions are taken care of, means that now, even if you are making payment in cash exceeding 10,000, no separate disallowance. If you have not deducted TDS, no separate disallowance. Means what? When we are computing income by the presumptive method, all sections are taken care of in this presumptive rate, except 40 clause B. If you remember, we had discussed this also in the previous class. What is section 40 clause B dealing with? I am a partnership firm and I pay salary, that is remuneration, to my partners. I pay interest to my partners. I will get deduction for that salary, remuneration, interest, but subject to the conditions and limits in 40 clause B. Now, this 40 clause B, which they are referring to, is deemed to be covered in 44AD and 44ADA. Means for these two sections, 44AD and 44ADA, the presumptive income 6%, 8%, or 50% is final. No deduction, no disallowances. So you don't have to look at entire PGBP chapter. You keep the entire PGBP chapter closed. You simply take the turnover, multiply by the percentage, that is final. But when you are in the goods transport business and you have computed your income by this particular rate, which in my example was 9,90,000, if you remember, and I'm a partnership firm, then from that 990, I will be allowed deduction of interest to partners, salary to partners. But this same deduction will not be allowed from this 6%, 8%, which I calculated here, or this 50%, which I calculated here. So for these two sections, 40 clause B is not giving any deduction. Your 6%, 8%, or your 50% is the final PGBP income. But for this section, there is a deduction under 40 clause B. I hope this is clear. Next, even though we are not separately computing depreciation, because now no need to compute depreciation, whatever we studied in the previous class, no need to prepare the blocks. That is not the case. You will prepare the blocks, you will compute the depreciation, you will deduct the depreciation and find out closing WDV as if you are in the normal method of computation. Means that you are in this presumptive section, you will not get separately the deduction for depreciation, but still you have to compute the blocks as if you were allowed the depreciation deduction. So now you'll say, sir, what is the use? Because anyways, 6%, 8%, or the 50% is already covering all deductions, even depreciation. Agreed. But understand this, students. You are in this presumptive income sections, not for the entire lifetime. Only till you are within those turnover limits. The moment your turnover exceeds the limits, you are out of this section and you will get into the regular section. The moment you get into the regular sections, you have to compute depreciation. For that purpose, what will be the WDV? So they say that the WDV would be as if you have claimed and you are allowed the deduction of depreciation. Asta is saying, sir, here partnership firm includes LLP also in 40 clause B in 44A. Yes, beta. 44A partnership covers LLP, both. You're right. Now, interesting part, tricky part. Now, what is this tricky part? If you remember, we studied in the previous class, the last point that was about maintenance of books and getting the books audited. This is also called as tax audit. We will revisit that section today again. That is my second and third section to be covered, 44AA, 44AB. 44AA is maintenance of books, 44AB is getting the books audited. Now, again, over there are some limits. Once your turnover crosses those limits, you have to maintain the books. Once your turnover crosses some limit, you have to also get the books audited by a chartered accountant, and you have to file the audit report before you file the income tax returns. This is what is the tax audit. Now, if you are in the presumptive income, any of these three, 44AA, 44AB does not apply. This is what is the first provision. So, you are not required to maintain the books and you are also not required to get them audited. So the provisions are, you need not maintain the books, you need not get them audited. Perfect. Great. Now, when they say that you need not maintain the books and need not get them audited, what it also means that we do not require them. Why we do not require them? Because we have given you presumptive. See, why audit was required? Please understand why this audit provision is there. Because the government wants to know that have you computed all your deductions and calculated them correctly as per the provisions what we have studied in the previous 5 classes. And that has to be done by an expert chartered accountant and get report of that chartered accountant who will say that yes, all these deductions are correctly claimed. Perfect. But when we are not giving you any deduction, why? Because we have a estimated income. Estimated income covers everything. There is no need of the deductions. And when there is no need to get your books audited. Perfect. Excellent. But then the section says, however, if you want to claim that your business income is lower than the presumptive amount which we have given above, then we will not check whether you have crossed the limits of 44AA or AB, because as I said, for maintaining books and getting them audited, there is a limit given which we are going to study. So what they are saying, that if you want to show that your business income in these 3 sections is below the estimated amount which we have given, then you will have to maintain the books and get them audited without looking at the turnover limits. So this section is in a way also counterproductive, because at one point it is giving you all the relaxations, no need to maintain books, compute income directly, but at the same time it is putting this indirect condition, or I will say indirect punishment. So you have to be very careful, students, that if your assessee is falling in any of these 3 sections, how the assessee has satisfied the above conditions, even if the assessee is asking you to do the computation in the regular fashion, that is add less, please check the estimated amounts and compare that whatever income you have computed by the actual method, because it is not that they cannot compute their income by the actual method, they can, but then that income should not be less than the estimated amount. If it is less, then however small the assessee may be, whatever may be the turnover of the assessee, students, you will have to maintain the books. You will have to audit the books. Compulsory. Otherwise, they will have to face the penalty of non-maintenance and non-auditing. Is this clear? Now, interestingly, 44A says that, however, if the assessee claims his profit be lower than the profits computed by applying the presumptive rate, he has to maintain the books of accounts and get the books of accounts audited, full stop. Nothing else. However, when you come here, it is putting one small extra condition. What is this? However, if the assessee claims his profits to be lower than the profits computed by applying the presumptive rate, he has to maintain the books and get the books audited. But here there is no full stop like how it was here. It says further one more condition: if his total income exceeds the basic exemption limit for that year. Now I hope you know that there is some basic exemption limit for individuals, because of which up to certain amount, 3 lakhs or 5 lakhs, they don't have to pay any tax, which is called as the basic exemption. So for 44 ADA, they have said that you are required to maintain the books, you are required to get the books audited, but this condition, this punishment will apply, one, when it will be triggered if you want to claim a lower income, but at the same time you have to also check the total income, that if the total income is below the basic exemption limit, then need not follow this, need not get the books audited. So you have to check both the things. One, you are claiming a lower income than this 50% criterion. Two, your total income. Total means covering all sources, whether it is exceeding the basic exemption limit. Fine. Sir, if the books are showing less income, but not claim that income and claim presumptive income. Exactly, Astha. So this is what is the point. Astha has pointed out it perfectly. Then in this case, indirectly what the provision is saying, that even if your books are showing less income, that is your actual income is less, still you show the minimum presumptive income. This is what indirectly, yes, Astha, you're right, the section is making you do. So when your income is less, still maintain the books. Still get the books audited. Or don't show that less income or actual income. Show presumptive income. Once you show presumptive income, you're out of all this tax audit business. Fine. Now coming to 44AD. What it says, it again says the same thing. However, if after declaring profits on presumptive basis under 44AD, say for the assessment year 24-25, non-declaration of profits on presumptive basis for any of the 5 successive assessment years, that is 25-26 to 29-30, let us say immediately in next year 26-27, would disentitle the assessee from claiming profits on presumptive basis for 5 successive subsequent assessment year relevant to the previous year of such non-declaration. In such a case, the assessee would have to maintain books of accounts and get the accounts audited if his total income exceeds the basic exemption limit. So we had a simpler punishment or a simpler provision of punishment that you want to show lesser income, maintain books, get them audited. That was 44A. Then 44ADA put one more condition. You want to claim lesser income, and if your total income is exceeding basic exemption limit, then maintain books and get them audited. Now 44AD is giving some additional restriction and condition. But this, now see students, I have been saying this from day one. I want you all to groom to understand the legal language. In fact, already our module has given some simplified. So I'll give you 2 minutes. I will not explain you this point. You have this in your module. I give you 2 minutes. Go through this entire point and somebody from you put it across to me. Chalo. You have to interpret, and anybody of you raise your hands. I'll unmute you. You'll explain. Okay, only one hand raise.
सर दिस प्रोविजन सेज कि अगर जब हमने प्रिजम्पटिव बेसिस पर अपनी प्रॉफिट्स को कैलकुलेट करना स्टार्ट किया तो उसके 5 years के विद इन अगर हम किसी भी एक साल में अपने प्रिजम्पटिव इनकम से नहीं कैलकुलेट करते हैं,
एक मिनट वापस आप बोलिए। आपने प्रिजम्पटिव इनकम से इनकम कैलकुलेट करना शुरू किया, ठीक है, फर्स्ट पॉइंट, नेक्स्ट।
देन हम यस सर,
go ahead, sorry to disturb, go ahead.
सो सर अगर हमने किसी भी ईयर में स्टार्ट किया अपने प्रिजम्पटिव बेसिस, तो वी हैव 5 years। अगर हम उस 5 years में से किसी भी एक साल में प्रिजम्पटिव बेसिस पर कैलकुलेट नहीं करते हैं, देन हमारे पास एक लिमिट लग जाएगी कि हम अगले 5 years तक प्रिजम्पटिव बेसिस पर कैलकुलेट नहीं करेंगे और उसे नॉर्मल बेसिस पर करेंगे एंड अपनी बुक्स को भी मेंटेन और ऑडिट करवाएंगे।
ओके, ठीक है। देयर इज वन मोर हैंड रेस, कहाँ गया? देयर वाज वन मोर हैंड रेस। Anybody wants to add? Anybody wants to change? Yes, there was one more hand raise. You can modify, you can change, you can add. No? Okay. See, what you're saying is right. I'll just deviate slightly. What is that? You said that once I start showing this, then in the first 5 years, if something happens, then there will be a problem. It is not like that. It is like this, that once you have started showing your income in the presumptive category, then now I'm using a word which is not there in the law, but this is just for your understanding. Then you can say there is a locking of 5 years. So what they want to say is that if you are showing income under the presumptive category, you have started showing it, then at least you should continue it for 5 years. Now please understand, this is obviously subject to, I repeat, this is subject to that you are fitting in this provision. Means what? If in these 5 years you have crossed the limits, obviously you are by default out of this section. How will you show it forcefully under this section? Sorry. So the point is that if you want to show it under this section, in that particular case, by default, the first implied point is you are falling within the conditions of this section. So you are within the conditions of this section. And now comes the point that you are in the conditions of this section for the 5 years, then you cannot opt out of this particular section in any of the first 5 years, because you can say like this, I will use this term which I already said, locking period. So what the law is putting another condition is that once you opt for this, or once you decide to show presumptive, show it for minimum 5 years, as pointed out by Asta. Now what will happen if, despite of fitting in this section, you decide to come out of this section? That is, you are still satisfying the conditions of the turnover, and still you want to not show the presumptive income, you want to show actual income. Now you'll say, sir, simple. If I want to show actual income, what I will do? I will simply get my books audited. Obviously, if you want to show a lower income, you already saw in the other two sections, you have to get the books audited. But now the challenge is, or challenge, instead of challenge, the proper word is, now the problem is they will not allow you to again come back in the presumptive category for the next 5 years. So the moment, if in between you break the chain, so in this example, now if I take the example which the module has very beautifully given, that let us say AY 24-25, you started with the presumptive section, that is, you showed your income in the presumptive category. Now you have to do this for 5 years continuously, because 5 years is the locking. And if in this 5 years, if in any year, so let us say here they have said 26-27, you come in the normal case Means what? You are showing a lower income than the presumptive income, which you are allowed to do by simply what? Getting the books audited. They are saying now it is not so simple. This will disentitle you from showing this presumptive or coming back to the presumptive in the next 5 years after this year of default. So 26, 27, I'm using the word default. That is when you came out of the presumptive in between by showing actual income, which is lesser than presumptive. Then they block your re-entry for the next 5 years. So now if you want to again show presumptive income or show the amount on the estimated basis, you can do it only after this 5 years block. So this is the additional restriction. This is the additional, you can say, condition put on you. I hope this is clear. Again, the same point. Then what you'll have to do, you have to maintain the books, get them audited, and this condition of getting the books audited will apply only if your total income exceeds the basic exemption limit. Yes, Asta, that is what I was trying to highlight. That is why I stopped you in between. So it is not only in the first year, but if in any year, whenever you see, any year means whenever you start showing or what do you say, calculating income by the presumptive section, from that year, 5 years, you should not show lower income. That is what is the crux. If you show lower income in any of those 5 years, then you are out of this presumptive benefit for another 5 years. This is what it means. Priyanshi is having something, sir. If not declared profit in last 5 consecutive assessment year on presumptive, assessee will not be able to claim profits for those 5 years due to non-declaration and will have to maintain and gets audited. If yes, beta, correct. Kevin is saying, sir, after 31, 32, can we claim as per presumptive? Yes, yes, yes. That is what is the point. So 5 years, your entry in this section is restricted. After 5 years, again, you are free to come back to this section. Again, when you come back, next 5 years, you have to be here only. That is what the section is. So whenever you are entering this section, you have to be here for 5 years. Okay. And then the last point is that advanced tax you'll be studying. What is advanced tax? Normally, we pay tax after the end of the current year in the next year at the time of filing returns. This is normal rule. However, if you have to pay tax in the current year itself, so I'm earning also and at the same time I'm paying parallelly also, that is where it is called as advanced tax. Now, advanced tax has to be paid quarterly. So alongside the current year, like now this new year has started, this new year 25, 26 is going on. So whatever income I'm earning, I have to pay my tax quarterly. Every quarter, after the end of the quarter, I'll go and pay tax, computing my tax on some estimated basis, which is called as advanced tax. Now, we have to pay tax in all the 4 quarters. However, who are opting for presumptive incomes like 44AD, ADA, they have to pay tax only in the last quarter, that is in the March month. So they don't have to pay advance tax in the first 3 quarters. They will have to pay advance tax in the last quarter. However, the one who's covered in 44A, they will have to pay advance tax in all the 4 quarters. So for them, there is no relaxation. Now, coming to the definition of heavy goods vehicle, what is heavy goods vehicle? The vehicle whose weight is 12,000 kgs and which is mentioned in their certificate as per RTO. Now, which weight? It is saying the gross vehicle weight. So what is the gross vehicle weight? It is the total weight of the vehicle and load certified and registered by the registering authority, that is RTO. So when you go for RTO registration, they measure the weight and they register. What is the unladen weight? The unladen weight is the weight of the vehicle only without goods. So the weight of the vehicle, naked vehicle, is what is unladen weight. So the weight of the vehicle trailer, including equipments ordinarily used in the vehicle or trailer when working, but excluding the weight of the driver, attendant, and where alternative parts or bodies are used, the unladen weight of the vehicle means the weight of the vehicle with the heaviest such alternative body. But without goods, without driver. That is what is unladen. Correct? RTO meaning, but you have this road transport organization where you get your licenses of driving. RTO, we call it as RTO only, no? Even the policeman who stands for checking your license, and if you do not have proper documents, they levy fine. We call them as RTO authorities only, na? Right? Na? It is RTO only. Okay. Now, another section which I thought we will take slightly in detail is maintenance of books and getting the books audited. So we first come to the audit. What does this section says? Who are required to get books audited? So firstly, in case of a person who is engaged in business, so you are carrying on business, you have to get your books audited if your turnover of the business exceeds 1 crore in a particular year. But if you are covered in 44 AD, which we just studied, then obviously you have to get books audited when your turnover covers the 44 AD limit, which is 2 crores or 3 crores, as the case may be. Correct? So normally it is 1 crore, but there are some exceptions. One exception is 44 AD. Another exception is where your business turnover is majorly through banking channel, whereby more than 95% is through banking or only up to 5% or less than 5% is in cash, then the audit limit is raised to 10 crores. For 44A, the audit will be applicable only if they want to claim their income to be lower than the presumptive amount, which we just discussed. Similarly, for those people who are covered in 44 AD, they will not get their books audited up to 2 crores, 3 crores, as the case may be. That is what is the limit in 44 AD. But again, if they want to declare their income lower than this 8%, 6%, and what we just studied about this 5 years and all, they will have to get their books audited. In case of professionals, the limit for audit is 50 lakhs, which is also matching with 44 ADA. So no conflict over there. But again, if they want to show that their income is lower than this 50% and their income exceeds the basic exemption limit, they will have to get their books audited. Now, when you fall in this audit criteria for any of these turnover reasons, or when you want to show a lower income, that is why in such cases, Rule 6G states that you have to fill in and submit or upload these forms. Now the word is upload because everything is online. Form 3CA, 3CB, 3CD. These are the audit related formats and audit related reports. Now, accounts audited under other statutes are considered. Means what? So if you are already covered in the Companies Act and you have to get your books audited there, or some other law like Trust Act, or for that matter, any act where already books are getting audited, we are fine with that. We are not saying you do audit twice. We only want that you submit the audit report in our format. Now, when we say you submit the audit report in our format, by default, you'll have to check all those provisions which are covered in these audit report forms. But the point is, I am not asking you to recheck the whole book again. So if you're already company getting your books audited as per Companies Act, just include these pointers also in your audit so that you can fill in and upload the audit report as per our formats. Now, what is the due date for uploading this audit report? It is 30th September. Now see, for those assessees who are covered in tax audit, their return filing date is 31st October. Now, 1 month prior to that, that is by 30th September, the audit has to be completed. The audit report has to be uploaded. And then they have given the provision what will happen if you fail to do this. You will obviously have some penalty. The penalty will be lower of the about below two amounts. One is 0.5% of the sales or rupees 1,50,000. This is tax audit, Omkar. Stat audit is where you have to get your books compulsorily audited as per some other statute like the Companies Act, Trust Act, etc. That is what is stat audit. And here, what you are getting your books audited under 44AB, we call it as tax audit. Earlier, there was also GST audit, but now it is no more in the provision. So there is no GST audit. Yes, there is GST audit by the GST department. Earlier, we as professionals were also called upon to audit their books and give our certificate. Certificate means the reconciliation report. Now that has been removed from GST. Then we come to this section 44AA, which deals with maintenance of books. Now this section is interesting. Now for this section, we will go to my notes where I have beautifully made this section in a very simple form. See. Now, for the purpose of maintenance of books, that is 44AA, the assessees are classified into two categories: specified persons and others. So either you are a specified person or you are any other person. Now, who are specified persons? These are all those professionals about whom we were discussing in 44 ADA, that is chartered accountant, engineer, doctor, lawyer, or notified professionals. So if you are one of the notified professionals, you fall in A. If you are any other, you fall in B. Now, what is the rule? See, interestingly, they have given a turnover limit. What is that limit? We'll come to that later on. First, understand the provision. If your turnover exceeds in all the 3 years the limit which they have provided, so the arrow is going up, means your turnover has exceeded in all the 3 years, then you have to maintain specified books. Now, specified, just to remember in Hindi, I have written Yahich. Yahich means Yehi books. So, if you are a specified professional and your turnover from the profession exceeds the limit, which I will read, then if it exceeds in all the 3 years, then you have to maintain the specified books, Yehi books. But if you are not covered in the specified profession and your turnover in all the past 3 years does not exceed, that is, it is lower, you can see the arrow down. If it is not exceeding in all the 3 years, then you do not have to maintain any books. That is Nahich. Don't maintain any books. So see the extremes. If you remember, or if you can keep this extremes in mind, other things are by default. So there are two extremes. First, you are a specified profession and your turnover exceeds in all the 3 years, past 3 years. Then you have to maintain specified books, Yahich. And second, you are not covered in the specified profession. So you are covered in business or you are in any other profession other than the specified. And your turnover in past all the 3 years do not exceed the limit, then no books. So two extremes. Specified professional, past all 3 years turnover exceeds the limit, maintain specified books. Other businesses, turnover in past all the 3 years does not exceed the limit, no books. Now, all the people in between, who will be in between? That here, in case of specified professionals, their turnover exceeded, but only in 1 or 2 years, not in all the 3 years. Or here, where in case of non-specified persons or businesses, their turnover was less, but in 1 or 2 years, that is, it exceeded in 1 or 2 years, but did not in all the 3 years. So those who are in between, because there are two extremes, all the 3 years exceeding, all the 3 years not exceeding. Other than this, all people who are in between, for them, the law has said that you maintain books, but the books are not specified. They say you maintain such books as would enable the assessing officer to compute your incomes from those books. Now, books means they are not books, they are records. Now, what are these books or records? You have studied this in accounts in the chapter of incomplete records or single entry, where proper double entry books are not maintained, but details of the transactions are maintained in the form of some bank passbook, in the form of some cash notings done in some diary. Such books are called as non-specified books. Now, who are covered? A major chunk is covered in non-specified books only. Non-specified means any records which will enable the assessing officer to compute your income. Plus, in this, who are covered? All these 44 ADAE, etc. These presumptive income people are covered when they are showing lower income. So we saw that when they are showing lower income, they have to maintain books, get them audited. But which books? Non-specified books. Correct? Now, let us go to the module to understand the details. Now, what does the module is saying? Firstly, what is the turnover limit? So the turnover limit is 1,50,000. So when your turnover exceeds 1,50,000 in all the 3 years, then they are saying that you have to maintain the specified books, right? Now, what are these specified books? What are the prescribed books? That is given in Rule 6 bracket 2. It is your cash book, it is your journal, it is your ledger, and then you also have to maintain the carbon copies of your sale bill and original copies of your expenses. These are the only specified books. Plus, if you're a doctor that is carrying on medical profession, besides the above book, you have to also maintain a daily case register, and you also have to maintain an inventory register, inventory of all the medicines, etc. that you have. That's it. Now, where these books are to be maintained? These books are to be maintained where you are conducting your business. And where you are conducting your business in more than one place, then the books pertaining to each place of business should be maintained at each of those places. Up to what period the books have to be maintained? The books have to be maintained minimum for 7 years. I said 7. They have written 6. Is there a conflict? No. 6 years from the end of assessment year. So firstly, this current year is going on. Next year is my assessment year, and after that, 6 years. So total after this year, 7 years. So I have to maintain my books for minimum 7 years. Is this clear? So these are some provisions relating to maintenance of books. So here we take a break of 10 minutes. We are at around 7:35. So we start at 7:45 and we go to few more sections. In the meantime, if you have any queries on any particular section, language of any section, please feel free to discuss. Asta, can you just pose the query again? I may have missed in the list of so many queries. You just post it again. After the break, I'll take your queries. So students, 10 minutes break. We reassemble at 7:45. So let me address one by one. So the first query, which was Asta's query, sir, explain at page 3.206 C part. Okay. 3.206. Sorry, 206 or 306? 3.206. Okay. Zero six. Six. You're saying C part. What is it out here, beta? It is saying the assessee must own the asset wholly or partly. So we are talking about depreciation. So what it says, in case of building, the assessee must own the superstructure and not necessarily the land. Okay, so maybe you are talking about this part, the superstructure and the land part. Fine. Now what it means, please understand. See, it may happen that your land is on lease, like in case of all industrial plots, in all these industrial zones, the land is owned by the government, but they give it to you on 99-year lease. So you're not the owner of the land, but the factory and everything else you construct with your own cost. So in this particular case, they are saying that it is not necessarily that you should also be owner of the land. Even if you are owner of the superstructure is the building. Anyways, there is no depreciation of the land cost in any case. So even if you are owner of the land cost, you won't have got the deduction of depreciation of the land cost. You still have, you still would have got the depreciation only of the building part. So similarly, even where the land is on lease, they are saying you still get the deduction, and that will be of the structure, that is the building part. Fine, beta. Next question is asked, sir, in terminal depreciation, it is written that depreciation will be available only if the deficiency is actually written off in the books of accounts means. So see, beta, understand one thing. Whenever, see, what is terminal depreciation in our language of accounts? It is the loss on sale of asset that we discussed with an example, right? Now, if it is loss on sale of asset, then understand this. You anyways debit it to P&L. So you have written it off in your books. So first part is answer. Terminal depreciation is written off, right? Sir, why leasehold assets will come under cost of projects? Okay, so this is your second question. I think this is with respect to the section relating to preliminary expenses. This is what I believe. So your question is why leasehold assets will come under the cost of project. See, what is cost of project? Where cost of project is the cost of your long-term assets. Now we just were discussing about leasehold land. All these industrial plots, they are on the land which is under lease 99 years. Now, when the government gives you this 99 years lease, the land, it is not given free. In fact, they charge you a premium which is near to the price of the land. So effectively, what you are paying is the price of the land for getting the land for 99 years lease. So that is a substantial amount which is capitalized in the book called as leasehold land or leasehold property. And that is also your long-term asset. See, it is as I said, na, had you purchased the land, you would have paid something, you would have called it at freehold land. Then it would have come in the cost of project. Similarly, if it is leasehold land, you have paid a big amount as premium, so that will also come, right? Next part, she's asking, sir, even if we have deducted or deposited less TDS, then also 30% or 100%. See, beta, if you are depositing less TDS, now that is where at finals you will get to study the disputed cases on that. So in some cases, they are saying deposit of less TDS is also equivalent to non-deposit. So you should not be eligible for deduction. And some cases says that no, at least you should get the proportionate deduction. Correct? So my understanding, if I go by the literal reading of the law, you should not get deduction if you have deposited less TDS. Sir, in 43B, conversion of interest into loan clause DA is not covered. Okay, so that is okay, na? See, please understand, beta. If you are saying that it is not covered in your module or something, I have already mentioned that all sections are not covered here. They will be adding few sections at a later stage, maybe at finals. Sir, if employee's contribution is not deposited in time, then will not get the deduction in any year. Perfect. So there is a difference between employee's contribution. employer's contribution, if you do not deposit by the due date of filing returns, which is covered as per 43B, you will not get deduction now, but you will get deduction in future because employer's contribution is covered by 43B restriction. However, employee's contribution is not covered by 43B. It is only given in 36(1)(5A), where it is saying that employee's contribution should have been deposited by the time limit of the respective act. So if it is Provident Fund, it should be deposited by the Provident Fund Act's time limit. And if it is not done, it will never be allowed. Again, when you come at final level, beta, you will find that there are challenging or opposite views. This matter is still pending with the Honorable Supreme Court to take a final decision. Writ petitions are filed, review petitions are filed. So maybe by the time you all are in final, you may get to read a different law. But as on date, again, going by the literal meaning, if you do not deposit the employee's contribution by the due date of the respective act, which will come every month, that amount will be never allowed as deduction. Right, beta? Ishan, sir, please check the following. 44 AD, if an AY 25-26 shown in presumptive, then shall show in presumptive till 31. If non-declaration presumptive in 2029, then cannot show income in presumptive for next 5 years. Thereafter can show. Perfect, beta. You're right. Yes. Then Smriti is saying, sir, 3.223 explanation 6. Explanation 6, 3.223. 1 second. I'll open page 3.223. I think it should be relating to depreciation only. The special cases of actual costs, 3.223. Depreciation provided in the books. You are saying this one only, na? 3.223. Achha, sorry, it is 3.2236. Where is explanation 6, beta? 3.223. Explanation 6. Smriti. So, beta, here you at least tell me which point it is. 3.223. Okay, I'll unmute you.
Sir, like in that C point, sir, above composite income.
Which one?
Yes, sir.
That one. Okay. What is it dealing with? Depreciation provided in the books of accounts deemed to be depreciation actually allowed. And explanation 6, the actual cost of the asset has to be adjusted by the amount attributable to revaluation. Okay. The depreciation actually allowed as above has to be adjusted by the amount of depreciation attribute. Okay. See, what is this point? Now, what does this point says? This point says that Section 32(1)(2) provides that depreciation shall be allowed at the prescribed percentage on WDV of any block of assets. 43(6)(b) provides that written down value in case of assets acquired before the previous year means the actual cost of the asset less all depreciation actually allowed to them under the Act, person who were exempt. Now, if you remember this, we had discussed this through my notes, where I have categorized all these explanations into 3 categories. One category was what I had said, where you have received any benefit earlier. Second category was tax evasion cases, and third category was where you are getting asset from previous owner by way of gift, will, etc. Now, in the first category, where I had mentioned that you have already got some benefit, in that one of the cases was up till now you were in exempt. From this year, your income is made taxable. Now, till the time you were in exempt, there was no need to compute depreciation or any of the workings because your entire income was exempt. So you did not do any working. After, let us say, 7 years, now the business is made taxable because the exemption is withdrawn. So from this year, your income is coming in the taxable category. Now, when your income is coming in the taxable category from this year, right, the point is you have to now show depreciation or calculate depreciation, and for that you have to do the working of the block. Now, in this 7th year, or let us say 8th year, after the first 7 years when no calculation was done, what will be the WDV of the block? So for this, the rule is, since you have already used the asset for past 7 years, though the income was exempt, you have got some benefit. So do one thing, you deduct the depreciation as per the books. This was the point. Now, when we say the deduction has to be as per the books, in books there is a problem that accounting standards allows revaluation, upward, downward, both. Now, if you have done upward revaluation in any of these past 7 years, let us say your original cost of the asset was 100. Somewhere in the third year, you added 25 to it because you felt that the value of the asset has increased. So you made upward valuation by 25 rupees. And because of that, you have also started claiming depreciation on that 25 for those 4 years. Now, what it says in this particular point, I want to find out your WDV of the asset for the 8th year, because from 8th year, you are going to do it under the income tax depreciation. No, sorry. But the challenge is, in this case, even though you are doing it from the 8th year, for the first 7 years, you have to deduct the depreciation as per accounts, but by removing the effect of revaluation. Now, how do you remove the effect of revaluation? First, in the cost, you have added 25. So you will deduct 25. And in the past 4 years, you have claimed some depreciation of that 25 also, which you will have to add back. So that is what is this point. So the depreciation actually allowed as above, means as per the books, has to be adjusted by the amount of depreciation attributable to that 25. So you bring the cost also to actual cost. So the 25 you added in the cost will be adjusted to make it regular. And the depreciation that you claimed in depreciation every year on that 25 means you have to remove the effect of revaluation totally from the cost also and from the depreciation amount also. Right, beta? Smriti. Soumya is saying, please explain 43A. Perfect. I'll explain Soumya 43A. Then you have page numbers 282, 283. Okay. 282, 283. Okay, I'll come to that. I think many of you all have same doubt. It's good that you all have read the module. Excellent. So 282, 283. Yes, beta Priyanshi, that is my plan also. Let's see. Maybe after taking these doubts, we'll definitely do that. Till then, do one thing, Priyanshi, just identify one of the lengthiest questions from this module. Just do that till I answer these questions. And let me tell you, it is going to be not now difficult at all. 282, 283. Okay, so same. 43. Students, what is 43? For this, I'll request that go back to accounting standard 11 if by chance you all have studied that or if you all recall that. Do you all recall accounting standard 11? Ishan is saying not done yet. Okay. 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 ठीक है. No worries. ठीक है. I'll explain you. Don't worry. So even some part of AS11 will be covered. Now, what does AS11 deals with? AS11 deals with effect of change in foreign currency rates. Now, for that purpose, AS11 has categorized your entire trial balance into, let us say, balance sheet items, non-balance sheet items. Over there, the terminologies are different, but I'm giving you simplified terminologies. Technically, you'll read there. So balance sheet items, non-balance sheet item, within balance sheet items, different categories. Now, I'm only talking about what is relevant over here. So I'm not explaining your entire section AS11 because that is not part of my discussion. Now in balance sheet, you have some long-term assets in the form of building, machinery, etc. Now this 43A is linked with AS11 Which point of AS11? That you purchased some machinery from outside India. So in our terminology, you have imported that machine, let us say for 100 crores. But this 100 crore is not rupees, it is dollars. So it is 100 crore dollars. Like now you are saying that we have purchased or we have given the next order for Rafale, plus Russia has given us something. So we keep on importing different things, but you have imported machinery for your business, let us say $1,000. And for simplicity, let us say $1 is rupees 90 today. Now, you have also taken an equivalent loan. So again, for simplicity, I am assuming you have taken same 1,000 crore dollar loan, which is again from outside India. So machinery purchase 1,000 crore, loan taken 1,000 crore, both are in dollars. Now in this year, you have two transactions. One is of liability, one is of asset. Liability 100 crore dollars, asset 100 crore dollars. But both when reported in our books has to be converted to our rupees. So you converted both at the rate of exchange applicable on the date of this import or on the date of this transaction. So it is converted at the rate of 90 rupees per dollar. So your liability is appearing at 90 multiplied by 100, so 9,000 crores loan. And also asset is 90 multiplied by 100, that is 9,000 crores. Simple. Now this 9,000 crore assets, which is your machinery, is getting depreciated every year with actual cost as 9,000 crore rupees. Similarly, in your liability, this $100, which is 90 multiplied by 100, that is 9,000 rupees, it has to be repaid every year. Let us say every year you have to repay $20 along with the interest, whatever it is. Now, interest we are not concerned here because interest will go to the P&L. So whatever is the amount of interest and the exchange rate or exchange valuation difference is not bothering us in balance sheet. But what is bothering us in balance sheet is that you had taken 1,000 crore in dollars loan, converted to Indian rupees became 9,000 rupees. But when you are repaying this 100 crore dollars, which you have to repay every year, 20 crore dollars, this 20 crores, after 1 year, when you are repaying the first installment, let us say now the dollar rate has increased to 100 rupees. So for this 20 crores, what you have to repay at that first year, you are repaying 20 multiplied by 100. But you had booked this liability at 90. So effectively, you are paying rupees 10 more for this 20 crore. So 10 on this 20 crore is 200 crore rupees you are paying extra. I hope first you will have understood this. So when you repaid the first installment, which is of 20 crore dollars, but to buy this dollars, you have to pay at the rate of rupees 100 per dollar. So 100 per dollar into $20 became 2,000 rupees. I'm not concerned about entire 2,000, but in this, your liability, when it was recorded at 90 rupees per dollar. But when you're repaying that, it has become 100 rupees per dollar. So you are paying 10 rupees per dollar extra. So $20, 20 crore dollars, what you repaid at the end of year one, multiplied by 10, you repaid 200 rupees, 200 crore rupees more. AS11 says this 200 crores, which you are paying more for this liability, has to be added to your cost of asset. Same thing is given in 43A. What it says, whatever is the exchange rate difference which leads to increase or decrease in the liability, whenever you are making payment of this liability, and this liability is representing whole or part of the cost of asset, because you had borrowed money for this particular asset only, right? So this liability which you are repaying is representing that asset only because this liability was incurred for that asset, and both were incurred at that time in foreign currency. But now when you are repaying the liability, you are repaying obviously by buying the dollars, by paying in rupees. So there is some increase or decrease in such liability. In my first year example, first year end, the liability increased by 200 crore rupees. You had to repay $20, but you paid 10 rupees extra per dollar. So it is 200 rupees extra. AS11 matching with 43A says you add this in the cost of the asset. So what will happen? your cost of asset, whatever was originally 9,000 crores will become 9,200, depreciation on 9,200. Same thing mentioned over here, that this increase in liability will be adjusted in your cost of asset as per 43.1. 43.1 is cost of asset for depreciation, or if this asset was purchased for scientific research, it will get added to 35. So it means you'll get more deduction of 200 crores. Or if it is part of family planning or wherever this asset is appearing in your income tax, everywhere the assets cost will be increased by 200 crore rupees. And then further deduction, depreciation has to be calculated accordingly. Let us say at the end of year 2, when you have to again pay the second installment of 20 crores, now the dollar rate has fallen below 90, it has become 85. So now you have to pay 5 rupees less behind every dollar. So you have to pay 20 crore dollars, 20 crore multiplied by 5. So you have to pay 100 crore rupees less. So there is a benefit of 100 crore. Again, AS11 equivalent to 43A says this decrease also has to be adjusted in the cost of the asset. So at the second year end, I will reduce my cost by 100 crore rupees. That is what is 43A. Okay? Understood everyone? Because many people had to this section as a query. Soumya, sir, please explain B point asset use for less than 180 days. Can you just read and let me know what the point is? Priyanshi, have you identified any question so that I'll directly jump to that question? Question 9 of TYK seems bigger than other questions in TYK. Question 9, what is TYK, beta? I'm not very good at short forms. Test your knowledge, okay. What is Nidhi saying? Aforesaid, meaning, sir. I did not get your point, Nidhi. Give me the sentence. I think you want to ask meaning of something aforesaid. Give me the sentence where it is acha, where the whole or part of the liability aforesaid is met. Aforesaid is what is mentioned above. Okay? Okay, no, test your knowledge, test your knowledge. Okay, let us test everybody's knowledge. So 9th is the sum you are mentioning, right? Excellent. Super. Now, let us take up this sum. Try to be honest by not jumping to the answers. Let us try to solve this sum with whatever we have understood till now. Correct? Oh, Soumya, but I think we have discussed this. So you're right. So this 50% rule in case of assets depreciation, that is where the asset is put to use for less than 150 days. If you remember, we had discussed this point very specifically, that in the year of purchase, if in the same year the asset is put to use for less than 180 days, you take half depreciation. But if in the year of purchase, let us say the asset was purchased somewhere at the end of the year, February, March, you did not put the asset to use for some reason. You put it to use in the next year. And in the next year, it was put to use for less than 180 days. Then you will not take half, you will take full. Right, Soumya? I think you're talking about this point. Okay. So students, let us take up this comprehensive sum. Try to recall the sums that we discussed at the start. So I've taken a simplified sum, but let me tell you, this is no different than that. This sum and that sum are same, right? I think students have opened the wrong module, because here, why it is giving 31st March, but this is the fresh module I think I've downloaded. Yes, it is the latest module which I've downloaded, 27/4/25. But why is the date 31st March 24? You all have the same module with the date as 31st March 24 only. I think it should be 31st March 25. Okay, so I think I have downloaded the wrong module, maybe a 1-year-old module. But anyways, I think the question would be same. So if there is some difference in the question, please let me know, right? So we are discussing the 9th sum. I hope everybody has the same question, same figures. If there is anything different, please let me know. So Mr. Raju, a manufacturer at Chennai, gives the following manufacturing trading P&L account. So you have these details. If you remember, how did we solve? We just check all the adjustments and mark it over there wherever the adjustments belong. So first adjustment is of administrative charges. So you'll mark it here that the first adjustment is for administrative charges. Then the assessee paid 33,000 in cash or transport carrier. So here, wherever there is transport charges, we have that 33,000 paid in cash. And if there is no such adjustment, we'll have to deal with it independently. Then the third is sum of 4,000 per month was paid as salary to staff, not recorded in books. So anyways, it will not be in P&L. Bank term loan actually paid is this much. So this will be dealing with the interest part. Housing loan principal. Okay. Depreciation, now they have given you block where you will do the calculation as per the block. Compute the total income assuming he pays tax under the default tax regime. That is the new scheme. Correct? I hope you all have the same question. Now, start from the credit side. And in the credit side, what we will do is we will identify those incomes which will not fall in PGBP, right? So sales will come in PGBP, fine. Closing stock will be in PGBP. GP anyways is net effect of the details. So it is part of PGBP. Now, dividend from domestic company and income from agriculture. These two are not part of PGBP as both goes in other sources. Now, while doing our computation of PGBP, what will we do for these two things? One is this dividend and one is this agriculture income. Students, you have to tell me the answer. What you will do in our PGBP computation? Good, Ishan. Good, Smriti. Others? Superb. Very good. Farhan, Astha, Soumya, excellent. Rajveer, very good. Chalo. So one thing is done of the credit side, right? Now let us move on to debit side. Debit side, how to proceed? 4 rules. And if there is any adjustment, and considering the adjustment if there is any restriction. So first, opening stock. Whether it will be allowed as deduction. First, related to business, yes. Current year, yes. Revenue, yes. Offense, no. Allowed. Any adjustment given? No. So finally allowed. Purchase of raw material, manufacturing wages and expenses. For both these also same rule. In fact, even for administrative charges, same rule. So for all these three, same rule. Related to business, current year, revenue in nature, not an offense. Now for these two, that is purchase and manufacturing, there is no adjustment. So we can proceed without doing anything. So in short, nothing doing for these three figures, opening stock, purchase and manufacturing. They are allowed in income tax and also they are debited to P&L, nothing doing. Administration also as per our 4 rules is allowed, but there is some adjustment. Now let us go to the adjustment. Administrative charges includes rupees 46,000. What is this dealing with? Paid as commission to brothers. Now, when you read this now, something should start ringing in your head. What something? We have different restrictions in section 40. You have to click. Now, what I click over here, there is a section 40 capital A bracket 2, which deals with payment to specified persons, which includes related persons, that is relatives. What it says, when I'm making payment of any expense to relative, income tax has no problem with that. You can do business with relatives, you can do business transactions with relative, but the point is, the challenge is that whatever payment you are making to them should not exceed the FMV of that expense. If it is exceeding the FMV, then the excess is disallowed. Now here first you have to check whether the expense which you are showing, is it exceeding the FMV or is it less than the FMV? If it is less than the FMV, no problem. If it is exceeding the FMV, which in this present example, it is exceeding the FMV by 10,000. So now this 10,000 will be disallowed. Reason is section 40 capital A bracket 2. So this difference of 10,000, what should be done? Very good. Soumya, Priyanshi, Astha, Rajveer, Ishan, Smriti, Almas, excellent. Farhan, superb. See, you'll have got the control over the subject. Excellent, students. Very good. Now, so in my reconciliation for administrative expenses, in bracket, I will write the reason, section 40A, subsection 2, 10,000 add. In notes, you can describe that payment made to related persons is covered by 40A2 restriction, which requires that the payment should not exceed FMB. If it exceeds FMB, the excess shall be disallowed. This you write in the notes. Now, SGST penalty. SGST, we all know it is one component of GST. GST has two components, center and state. It is the state component. Now, the point is, whenever there is any penalty, when we are applying those four rules, the fourth rule has to be checked. What is that rule? Is this an offense? Is this penalty for any reason of an offense? Now, just check below in any of the adjustments. Have they mentioned anything about why this penalty is paid? Now, whatever I recall of reading the section, they have not mentioned anything. Now, since they have not mentioned anything for this penalty, now the point is, what will I do? What will I assume? The answer is, I will be having this option of assuming whether the penalty is for reason of offense or not. If I'm assuming the penalty is for the reason of offense, it will be disallowed. If I'm assuming it is for general non-compliance, I filed return late, I missed some due date, I did not give some submission means some documents are required at the time of registration, at the time of refund, some procedural error happened, and that is why there is some penalty. It will be allowed. So since the question is silent, you are having this option of taking an assumption. Now in the answer already few students have said add. So it means, no, not few. Somebody is saying add, somebody is saying less. So I'm simply saying that it is allowed to you that you can take an assumption and write the answer. So if I take the assumption that it is penalty for an offense, then I will add. So I will write SGST penalty, add, bracket, assume to be offense. And again, I'll write a note because I'm assuming something, better is explain. Second assumption could be I'll do nothing because I will presume that it is not an offense. Still, I will write a note. I've not done anything in the reconciliation, but I still have to write in the note because I have to specify that why I have not done anything for this penalty. GST paid. All four conditions satisfied. No problem at all. Allowed. General expenses, four conditions satisfied. No problem at all. Allowed. But let's see if there is anything in general expenses. Okay. There is nothing in general, but I think we need to discuss on this point too. It is part of manufacturing expenses, which was above. So I'll just take this. I'm misreading this. What it says, the assessee paid 33,000 in cash to a transport carrier on this date. The amount is included in manufacturing expenses. Okay. Assume that the provision of TDS are not applicable. Okay. So TDS is not applicable. So that much load is reduced. Now you have made payment to transporter of rupees 33,000 in cash. Again, something should trigger in your head. Firstly, all four conditions are satisfied. Yes, no problem. But something should trigger in my head. Something should ring in my head. What is that which is ringing in my head? 40A bracket 3. Now 48 bracket 3 says whenever I am making payment for which I am claiming deduction and the payment exceeds 10,000, there is a problem if it is by cash. However, in the same section, there is a relaxation given for payment of transport charges. What is the relaxation? Yes, very rightly pointed out by many that the limit for transportation is 35,000. Rajveer, for all other expenses, it is 10,000, but for transportation, yes, rightly pointed out by Ishan, Astha, Farhan, Soumya, very good. The limit is 35,000. Now, since the limit is 35,000 and your amount paid is within the limit, even though if it is paid in cash, nothing to be done, nothing to be added. But again, we will write a note in the explanation saying that 40A3 requires that if any amount of expenses exceeding 10,000 in a day is paid in cash, it has to be disallowed. However, for payment of transport charges, the limit is 35,000. Since in the given case, the payment is only 33,000, it is well within the limit, hence nothing has to be disallowed. Right? Okay, I was talking about general expenses, no adjustment given, so entire general expenses is also allowed, right? Priyansh is asking, sir, if it is nil means no effect is to be given, why we have to, what she said, why we need to show 48.3. See, beta, remember one thing, when you're solving a sum, especially a taxation sum, what you are doing in computation, that carries marks. Equivalently, what you give as the notes, that is a justification, it also carries marks. Like for 2 points, we did not do anything, but we have to mention why we did not do, like the SGST penalty, if you are assuming it is not an offense, and similarly this 33,000. You are not doing anything, but by not doing anything, the examiner will not understand whether you missed or you have intentionally not done. We have intentionally not done because we know the provisions correctly, but we have to show that we know the provisions correctly, and that is why we have to write a note. Okay, beta? Now next comes interest to bank on machinery term loan. So you have taken machinery on loan for which every year you have some interest. Now for this interest, we have some adjustment. What it says, the bank term loan interest actually paid up to 31st March was 20,000 and the balance was paid in November. Okay. Now, what triggers in your head? It means this interest, which is shown as 60,000, is the due interest, out of which payment was done 20,000 up to 31st March. So 40,000 on 31st March was outstanding. Now, when you see this outstanding, again, some bell should ring in your heads. That is section 43B. Because section 43B, yes, very good, is the section which has some restriction relating to outstanding. But 43B has given a list what all expenses should not be kept outstanding, and in that there is interest payable to banks. So this point is covered. Now what does 43B says? It says that if any amount of expense which is given in 43B is outstanding on 31st March, it is okay, but it should be paid before the due date of filing returns. If it is not paid up to the due date of filing returns, problem. Now in this question, we have to first identify what is my due date of filing returns. Definitely it is not November, it will be 31st of July if tax audit is not applicable. Now, how will I know tax audit is applicable or not? See the turnover. It is 2 crore 32 lakhs. Now, I am definitely in tax audit. And if I am in tax audit, I have to file my returns by 31st of October. And if I have to file my returns by 31st of October, still I have not paid by 31st of October. So, as rightly pointed out by some of y'all, this 40,000 which is not paid up to the due date of filing my returns, which is in this case 31st of October, I will have to show it as a disallowance. Correct, Soumya, Astha. Priyanshi, I think it should be 31st October, not 31st July. So 40,000 will be added for this particular expense, that is interest. So you'll write bank interest, bracket, you'll write 40A, sorry, 43B. You will add 40,000 and again in explanation, you'll explain this, right? Depreciation. Now this depreciation is as per P&L, first add entire amount. Now we will subtract the amount as per income tax, and for this you have this working. Now what is the working? WDV as on 1st April 2023, which is in my example the first day of the year, minus depreciation for 22-23. Additions during the year used for more than this, total additions during the year. Okay. So what it says, opening WDV is 1190, total additions is 4 lakhs. There is no sale. Out of this 4 lakhs, 2 lakhs are less than 180 days. How come? Because they are saying additions during the year used for more than 180 days is 2 lakhs. Total addition is 4 lakhs. It means half, that is 2 lakhs, is less than 180 days. Now the working, if you remember, 1190 plus 4 lakhs minus sale value, which is nil. So my WDV over here becomes 15,90,000. Correct? 1590 is my WDV. First point. Now, in this 1590, I have to compute depreciation. And in depreciation, 2 lakhs is half. So on 2 lakhs, I will compute 7.5%. And on the balance, what is the balance? Balance is 13 lakhs 90,000. I'll compute 15%. So just do it on your calci. 2 lakhs, which is half, 7.5%. Balance amount, which is 13 lakhs 90,000. Full depreciation, which is 15%. Add both these amounts. Ask, I'll answer you. Just give me some time. Tell me, students, the amount for depreciation. Okay, 223,500. So total, half plus full, right? Now, interestingly, students, we also studied something about additional depreciation. And if you see at the start, they have mentioned that the person is a manufacturer. So you're a manufacturer, it is plant and machinery. New, we are presuming for production, and the rate is not 100%. So you are eligible for additional also. But I will not claim additional depreciation. Why? Because they have asked me to compute under the default regime, which is the new regime. And under new regime, additional depreciation is not allowed. So for me, this is the only depreciation which you all have calculated, that is 223,500. So what I will do is I have added the entire amount of P&L depreciation, add, and in less, I will subtract 223,500, for which I will show this working. Right, students? Understood? Now let me see what is left out. Point 3 is left out. What does point 3 says? A sum of rupees 4,000 per month was paid as salary to a staff throughout the year, and this has not been recorded in books of accounts. So 4,000 per month into 12 months is 48,000. 48,000 is not recorded in books of accounts. It means it is not forming part of P&L also. So accounts has not shown that expense. But is it a genuine expense? Yes. All 4 conditions satisfied. Is it business expense? Yes. Revenue, current year, not an offense. So what we should do, we should take deduction. So 12 months into 4,000, 48,000, what I should do? Farhan, it will be only less. Correct, Farhan? I think you have corrected yourself. So it will be less 48,000. Right? Now, students, here interestingly, there is something else which you all have not yet studied, which you will study in the chapter where you will deal with clubbing. Clubbing means where income of some other person is added to your income. That is what is clubbing. Now, where income of some other person is added to your income, which is clubbing provisions, in that clubbing provisions, there is something. What is that something? That something says unexplained expenditure. What is unexplained expenditure? If you have made some expenditure for which you are not giving explanation, you are hiding that, then they say we will deem this to be your income. Now, if I treat this expense as unexplained as per that particular chapter, section 69C is the specific section dealing with that, then I will have to do something else for this 4,000 into 12 months, that is 48,000. However, that is again an assumption. You need not go for that assumption. At this level, you will simply consider this as a genuine business expense, and non-recording of this business expense is an error of omission. It means 69C we are not applying. So the simple answer is what we just discussed, you will deduct. Next, housing loan principal repaid during the year 50,000, and it relates to residential property acquired by him in the previous year for self-occupation. Interest on housing loan was 23,000. Housing loan was taken from Canara Bank. These amounts were not dealt with in P&L. Anyways, it should not even be dealt with in P&L because this goes to the HP head. So anyways, we are not going to do anything for this because they have not considered this in P&L, which is correct because it has nothing to do with business. Yes, in PGBP head, what will happen? Sorry, in HP head, what will happen? In HP head, you will show this HP. Which HP is this? This is self-occupied. So GAV is nil. Municipal tax anyways is not given. Even if it would have been given, we would have taken it as nil. NAV nil. Sunday deduction nil. Only you would be allowed deduction for interest up to the limit of 2 lakhs. Here your interest is 23,000. So this entire interest should have been allowed. But here, since our method is default and in HP head for self-occupied house under the default scheme, what did we study? We studied that if your property is self-occupied, you should not get the deduction for interest. Yes, Asta, perfect. You are excellent. So this interest, which I just explained as per the provisions of HP, in this sum will not be allowed as deduction. In short, in this sum, your HP income loss will be zero, because under the default regime, if your house property is self-occupied, there is no deduction for interest. So again, for clause 5, we will simply write a note that since we are in the default regime, there will be no deduction for this interest. That's it. That is the end. So this is how your sums are. Clear, students? Understood? Anybody, any doubts? Yes, I'm sure somebody will feel ki, sir, okay, but it did not click us the default regime, what is there, what is not there, or it did not click us that if something is given, which section to apply. See, that is part of practice. The reason it is not clicking because still you all are not too much into the chapter, into the provisions. The moment you start solving these sums, maybe for the first go, 100% answer may not be right, but I'm sure whatever I've seen, your replies and all, I'm sure 80-90% of your answers will be correct. And let me tell you, that itself is a very big achievement, students. Mind you, people keep PGBP in option. If you are able to solve even in the first go right now, where you have done PGBP in your life for the first time, even if you are able to solve 75%, 80% correctly, that itself is a big achievement for you. You should tap your back. 100% it will be right with practice. Yes, I agree. See, even for me, it may not click at times, despite of me being in this subject for past 25 years. So that is how the subject is. That is how exam pressure is, right? Yes, Priyanshi. Many times I may also forget. So that is very human. Don't worry. Asta is saying, sir, please answer why 31st October, not presumption. Hey, sorry, I had to answer one thing. Asta, sir, but here we don't know about 5% cash and how can we calculate the presumptive income? See, understand. Firstly, Asta, we are not in the presumptive category because had it been presumptive, why would we do add less? If it would have been presumptive, I would have simply taken sales 2 crore 32 lakhs multiplied by that 8%, 6%, whatever it is. But that is what is not the intention of this sum. Had it been the intention, they would have asked you to solve it by the presumptive method. Plus, as you yourself rightly pointed out, they have not mentioned that whether my turnover above 95% is by banking channel, which is required because here turnover is 2 crore 32 lakhs. So in order to get the presumptive income limit of 3 crores, your 95% more amount should be through the banking channel, which is not given. And that is why, Asta, you cannot take a presumption, because if you take that presumption, the entire sum is over in one line, 232 multiplied by percentage. So that is why, Asta, you cannot take that presumption here, correct? So wherever they want you to do it by the presumptive, they will specify. And anyways, remember, students, presumptive will never be part of the main answer. It will be always MCQ question. They will ask you to compute presumptive, or in this sum, they will ask you to do both. They will say, okay, you compute the income and also say if he goes for the presumptive, what will be the answer? Sir, in answer, the penalty 5,000 is added. Okay, but Aishan, I gave you answer both. So penalty, you have to write assumption. Both answers are accepted. Don't worry. You will find, in fact, if you refer different books for the same question, you'll find one or two answers here and there different. Why? Because assumption-based answer. That is why I'm saying write assumption, and both the answers are acceptable. Perfect, students. So PGBP good to go? Yes, beta. Aram se Priyanshi 8 to 10 marks, not only 8 to 10 marks. Don't worry. This is 8 to 10 marks question. So students, simple. Just practice. The more you practice, the more your probability of recalling things and doing it accurately in exam increases. No, beta Soumya. Once it is unexplained expenditure as per 69C, it will be treated as your undisclosed income. And if it is undisclosed income, it is not treated as an expense in the first place. So no deduction. In that case, entire amount will be added. So that 48,000, that is this adjustment, will have a total 180-degree different answer if I take it to that chapter 69, the chapter of clubbing and 69C. So that is altogether a different thing. Ha! Priyanshi is saying, okay, sir, 10 marks in the pocket. No, beta, don't be so high pitched. We still have long way to go to keep the entire 10 marks in pocket. But yes, being positive is good. But yes, remembering first day of this chapter, which was giving fearful vibes. Now it is sorted. Yes, but I told you on the first day, if you remember, that I am confident that it will be through. So don't worry. Smriti, please tell me specifically what is the doubt. See, bad debts, I'll explain you what it is. Bad debt simply is that they will allow you deduction for bad debts under section 36 if firstly it is recognized as a revenue of business. It means firstly it should be a business debt. Secondly, it should have been written off in the books. Now in the module, what else they are trying to explain is the part of the ICDS, which is not part of our syllabus. So don't worry, beta. Simply Smriti and everyone, for any expense, just apply the four golden rules. Just the four golden rules. That's it. You'll get the answer. ठीक है Smriti beta? Ishan sir, but it is mentioned it is salary. So why would it be unexplained expense? See, beta, Ishan, that is why I'm saying we are yet to study that chapter, which is clubbing. And in clubbing, no, sorry, not clubbing, undisclosed income, section 69, ABCD. Now, in that, they have specifically said that if you are not disclosing any expense, see, when will you not disclose an expense? Because it is done out of your black money. Like, I've done some from a foreign travel and I'm not disclosing, or I'm having lavish expenses daily, but I'm not disclosing. It means I'm doing it in cash. And from where has that cash come to me? It has come to me, obviously, through some undisclosed sources. So in that case, the expense, it is an expense, but it becomes your undisclosed income because you have not shown that expense. You are not able to give justification for that expense from where it is made. So they are not giving you any deduction of the expense. Rather, they are treating it as your undisclosed income. Right, Ishan? Thank you, Soumya. Thank you. Thank you for the compliment. My pleasure. Yes, Asta, exactly. This is what is the point. So in that case, the answer would be exactly opposite of what we did in this sum for 48,000. We showed it as less because we are showing it as a genuine business expense unrecorded. If you go to 69C, the answer will be exactly opposite. You will add it as an undisclosed income. No deduction. In fact, you'll add it as an undisclosed income. Yes, Asta, correct. So, students, good to go chapter. Now, I'm sure nobody will think of keeping it in option. In fact, you will suggest your other friends also to study this chapter and score the full marks. Yes. So that's it all from my side. Thank you. Thank you very much for being part of this entire 6-session power packed PGBP and contributing your inputs. Please keep studying and keep solving. Thank you. Thank you very much. Take care. Before your class in the break, when I was just going through my mobile, I saw that there is going to be some announcement by Bodiji at 8 o'clock. So let us all go to our TV channels and see. It may be something important for everyone. Thank you. Take care. Good night. Yes, sir. Thank you very much. And please take care of yourselves.